guys, it is Sunday, July 18th, and this is episode 22 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look at what happened last week. All right, you can see here that it looked like we were going to breach the upper breach point of 43.91, and then we kind of stalled out just below that, and then dropped like a rock in the second half of the week. So Thursday and Friday were both very red days, and we ended up looking like we may actually turn around and breach the lower breach point. But we didn't do that either. So in the end, we didn't breach either of the breach points, and for any of you following along, you know what that means. That means that the probability that we will breach one of the breach points in the coming week shoots up from about 80% to above 95%. In fact, it's about 96%, but we'll get into that a little bit in just a second. So we did stay within the expected settlement range, and we did not come close to the upper or lower settlement limits. The parabolic SAR also was way out of range, which we expected, but interesting, we did make our way back towards that midline of the Bollinger Band range. All right, let's move on to the moving averages. All green still, despite the fact that we had that reddish, move in the last couple days of the week, but still not enough to flip the short-term moving average out of bullish into neutral. But you can rest assured that if the price does not rebound significantly this coming week, we will definitely be at least in neutral territory with the short-term moving averages, if not bearish, if the downward trend continues. All right, let's take a look at the breach points for this coming week. We're looking at an upper breach point of 43.61 and a lower breach point of 42.91. Again, the big thing here is take a look at the odds of this happening. The odds are 96.95. So let's just say, call it 97% that we will have a breach of one of these two breach points. Obviously, we're a lot closer to the 42.91, and we've got some momentum to the downside that could propel it to breach that very easily. So that is the more likely scenario. But again, 96.95, that percentage does have no directional bias. So that is just how many times we will breach one of those breach points. So we could still breach that 43.61, but my money's on the 42.91. All right, let's take a look at the expected settlement range. So we're looking for the market to close between 41.96 and 43.90. Odds are 79.07% that we will close between that range. And then again, we are looking at the setup where we could very easily breach below 42.91 and still close above 41.96. All right, we're going to add in the parabolic SAR, which is set at 41.70 for this week coming up. So close enough to the lower settlement range where it's foreseeable that we could close below it. Of course, that would mean we'd have to close outside of the expected settlement range. So if you look at it from the perspective of what are the odds that we're going to close within the expected settlement range, right? So 79, let's just round it to 79 even. That means there's only about a 21% chance that we will close outside of that range. So we would definitely have to be in that 21% camp in order to be to close below that 41.70. So I would say not high probability, but still possible. All right, and we're going to wrap it all up here into the relative view. So you can see where the blue line represents the price at the close on Friday and where the breach points and settlement limits are. Looks like we're right up against that midline of the Bollinger Band, so that could act as a level of support. It typically does not provide very good support. Obviously, the lower end of the Bollinger Band provides better support, but it could slow it down a bit. So if we have enough momentum, we can blast right through it, but just a point of reference there for you guys. And we have enough room on either side to breach either of the breach points and not come up against the outer bands, right? Outer ranges of those Bollinger Bands. All right, and now we're going to go into didn't see that one coming. Okay, so all the math and statistics wonks out there, right? Get your hats on, because we're going to dive a little bit deeper into this phenomenon of when we don't have a breach of the breach point and why the odds are so high. And then we're going to dig a little bit deeper and say, what happens when we have a down week, when we close below what's called the central pivot point versus when we close above. It might give us some insight as to what we can expect in the weeks to come, in this week to come. All right. So a lot of numbers. We'll take it from the top here. So the average price action following a week with no breaches, right? Which is where we're at right now. Last week there was no breach, so this is what we can expect for the week to come. 58.64% of the time, we will end up breaching the upper breach point. 49.74% of the time, we will breach the lower breach point. But on the upper breach point, when we do breach it, we typically only breach the breach point, right? We only go above the breach point by 0.77%. Whereas on the downside, even though it happens less often, when we do breach the lower breach point, we tend to extend below it by an average of 1.71% below that breach point. So obviously when we go down, we tend to have a stronger move and we breach that breach point with much more force and momentum. So that's a baseline. That's just what we're looking at for this coming week. Now, this week we closed on a down note, right? So Thursday and Friday were red days, so we had a down week and we closed below the central pivot point. So what happens when we end a week with that negative momentum and we had no breach? Is there a difference? Well, the numbers say there is. So let's take a look at what happens on the upper breach point. So if we have a week that closed down and no breach, then we actually tend to extend above the breach point by 0.86%. So a little bit stronger move, right? So that would be like the buy the dip. So that rebound effect. So it goes up with more momentum when it does go up. But look what happens when it goes down. So when we breach the lower breach point, right? Because we had negative momentum going into the end of the week and there was no breach, the average breach is 2.25% below. So much stronger than the average 1.71% average breach beyond the breach point, right? So let's translate that into real numbers, right? So we know that the breach points for this week are 42.91 and 43.61. So what does that mean, knowing that we had that negative end of the week and no breach? Well, that means that we can expect a breach or the price to extend up to 43.98, right? Which is 0.86% above the 43.61, or down to 41.94, which is 2.25% below the 42.91. So all numbers aside, what we're really getting at here is the fact that when we have no breach, right, of the breach points, and we close on a negative note, we can expect the moves in the following week to be even stronger. So not only are the chances that we're going to breach higher, but we will breach with more strength. And if we breach to the downside, even more so than if we were to breach to the top side. So just a little something to keep in mind there. I figured I'd throw that out for you guys. And now you can't say you didn't see it coming. All right, and we'll wrap up with the quote of the week. And this is by Mr. George Soros. He says, "I'm not better than the next trader, just quicker at admitting my mistakes and moving on to the next opportunity." This is something I've been guilty of many times before. You get so wrapped up and passionate about the work that you're doing, the analysis that you've conducted, what the numbers say. Maybe you have a bias and you don't even know it. And so one of the key things to take away from this quote is that we all have to challenge ourselves and maintain the discipline to be able to admit when we're wrong and move on. Because while others are still, trying to find excuses to justify certain things, you could already be on to your next opportunity. So hope you guys all find your next opportunity right around the corner. It may be this week coming up. Until next week, see you guys. Take care.